Pocketguard stands out in the crowded market of financial apps because it addresses the most stressful question people face every day, which is simply how much money is actually safe to spend right now. It takes a very different approach compared to traditional spreadsheets or complex budgeting apps that require you to account for every single penny manually. Instead, this tool focuses on a concept called the in my pocket number. This is the heart of the experience, and it works by looking at your total income and then automatically peeling away your upcoming bills like rent and utilities, your specific savings goals, and any debt repayments you have committed to making. It even factors in your expected daily costs for things like groceries or gas. What you are left with is a single, clear number that represents your true disposable income for the day, week, or month. This creates a psychological safety net that is incredibly effective for anyone who struggles with overspending. If that number hits zero, you know it is time to stop spending, which simplifies financial discipline in a way that feels very natural and less like a chore. One of the biggest strengths of the app is its level of automation. It syncs with over 18,000 financial institutions through secure providers like Plaid and Finicity. This means that for the most part, the artificial intelligence handles the categorization of your spending so you do not have to spend your weekend logging receipts. Another standout feature is the Bill Shark integration. The app can actually scan your recurring service bills for things like your cell phone, cable, or internet and offer a service to negotiate lower rates on your behalf for a fee. This is a direct solution for the common pain point of overpaying for services simply because you do not have the time to sit on hold with customer service. Furthermore, for those carrying balances, the Debt Payoff Planner is a powerful addition. It allows you to choose between the popular snowball or avalanche methods and provides a clear projection of your freedom date based on your current budget. Seeing how an extra payment can shorten that timeline is incredibly motivating. However, no tool is perfect, and there are some real drawbacks to consider before committing. The free version of the app is quite limited and only allows for the linking of 2 accounts and a few custom categories. To get the full utility of the debt payoff strategy and unlimited accounts, you really need to upgrade to Pocketguard Plus. As of early 2026, the subscription costs approximately $12.99 per month or $75 per year. They do occasionally offer a lifetime subscription for between $80 and $100, which is a fantastic value if you plan on using it long term. You should also be aware that like any app relying on third-party aggregators, you might run into occasional sync issues with smaller banks or credit unions, which can be frustrating. Additionally, the customer support can be a bit slow, often taking 24 to 48 hours to get a human response if you run into trouble. Ultimately, this tool is ideal for someone who wants a set-it-and-forget-it experience and values automation over manual control. It is less suited for the zero-based budgeting purists who want to give every single dollar a specific job, as the passive nature of Pocketguard might feel too hands-off for them. It is also important to note that the connectivity is strongest in the United States, Canada, and the United Kingdom, so those living elsewhere might find the account syncing to be unreliable. If you are looking to simplify your life and get a handle on your cash flow without becoming a part-time accountant, this app provides a very clear path forward. In summary, Pocketguard is an excellent automated solution for managing real-time cash flow and visualizing debt reduction through its intuitive interface and the signature in my pocket spending limit. It effectively solves the pain point of financial uncertainty by doing the math for you. However, the primary risks involve the ongoing cost of the subscription, the potential for technical sync errors with certain banks, and the limitations of the free version, which might force you into a paid plan sooner than you expect.